Good day. I trust you're all well and safe. I would like to welcome you to the International Statistical Institute's 63rd World Statistics Congress of 2021. In today's session, we're going to focus on a wickedly hard problem, which relates to the statistical measurement of illicit financial flows. Illicit financial flows pose a serious problem for financing development, largely because they drain capital and tax revenues in developing economies, undermining their ability to mobilize already very scarce resources. Illicit financial flows also pose a direct threat to sustainable and inclusive development by diverting resources from social spending and productive investment, and thereby impede structural transformation. As a result of the scourge, it's not surprising that the 2030 Development Agenda focuses on significantly reducing illicit financial flows in order to promote sustainable development. In order to curb illicit financial flows, it's important that we have a better understanding of what that particular flow is, how big the size of the problem is, what the relevant sources and channels are, and some insights into illicit finance and related mechanisms. This requires relevant data and statistics. However, by the sheer nature of them being illicit, it means that they're hidden, making them very difficult to track and measure. And this often results in either an over or an underestimation of the problem. To this end, the United Nations Conference on Trade and Development, UNCTAD, and the United Nations Office on Drugs and Crime, the UNODC, collaborating with the Economic Commission for Africa, UNECA, have established an international statistical task force that has now developed statistical concepts and methods on the measurement of illicit financial flows. Today's session, we will actually share the conceptual framework and the recommended methods for the measurement of illicit financial flows, and welcome countries to actually share their experiences. We have 4 excellent speakers to guide you on this journey, and I will actually be introducing each of the speakers to you. I will also be the discussant at the end of today's session. My name is Kathy Nicolau-Manius, and I have been working in the illicit financial flows space since 2011, when I headed up the Illicit Financial Flows Policy Unit in South Africa's Financial Intelligence Center, where we were tasked to actually measure the size of the illicit economy as well as illicit financial flows. I've also been collaborating with UNCTAD and the UNODC, and specifically UNECA, on the measurement of illicit financial flows, focusing specifically on commercial and tax malpractices. And I'm also the UNECA IFF consultant for the 10-country pilot, but a little bit more about that a little later. So our first speaker that we're going to hear from is Ms. Diana Camerini, who is the IFF's project coordinator at the UNODC in the data development and dissemination section. Diana is supporting the pilot testing of statistical methodologies on crime-related illicit financial flows in Asia, the Pacific, as well as in Africa. And she'll be presenting the conceptual framework for the statistical measurement of illicit financial flows. Mr. Boyan Nastav is actually from UNCTAD, and he's a statistician who's responsible for leading the work on the development of methodological guidelines for the statistical measurement of the tax and commercial IFFs component. And his presentation really looks at exploring the various methodologies for the measurement of tax and commercial related illicit financial flows. Our third speaker is Ms. Salome Flores Sierra Franzoni, who is at the UNODC INEGI program in Mexico. She is actually coordinating all projects and activities at the UNODC INEGI Center of Excellence in Statistical Information, focusing on government, crime, victimization, and justice, specifically in Mexico City. She will be presenting on the results of the pilot to measure illicit financial flows in Latin America, focusing specifically on illicit narcotics and human trafficking in Mexico and South America. Our next speaker is Mr. Bishop Akolgo. He is the former executive director in the Integrated Social Development Center, an NGO based in Accra in Ghana. Bishop is an expert on modeling illicit financial flows and its developmental implications for Ghana. He will be presenting on the importance of data and statistics in the field of illicit financial flows, looking at the Ghanaian experience. Lastly, I will be looking at the various highlights from each of the presentations and discussing some of those issues. And for more information, you may go to the following websites and click on the following links in order to be able to get more information. So I hope you enjoy this session with us, and I'll chat to you a little bit later.
My name is Gianna Camarini and I work at UNCTAD. I'm going to present today the UNCTAD UNC Conceptual framework for the statistical measurement of illicit financial flows. This presentation has been prepared by myself and by Enrico Bisogno, Chief of the Data Development Dissemination Section at UNCTAD. I would start to give a little bit of a flavor of what has been developed so far by UNCTAD and UNCTAD for the measurement of illicit financial flows. These two agencies are co-custodian of the SDG indicator 16.4.1 on illicit financial flows. And I've started the work by consulting in 2017 by consulting several actors and global experts on illicit financial flows to try to find a definition for statistical purposes and be able to provide inputs to statistical offices and other relevant agencies for the measurement of illicit financial flows for statistical purposes. Illicit financial flows are a phenomenon either by definition and no such no official statistics exist. However, they have a tremendous impact on social security, peace, justice, and sustainable development. Illicit financial flows are at the crossroad of multiple policy agendas then. Are an instrument for evasion and or avoidance and therefore imply a loss of public resources, are an instrument for committing or facilitating corruption and a vehicle to foster illegal market or invest related proceeds, so proceeds of crime or several types of crimes. And as such, they erode rule of law and they weaken the justice system. As well as illicit financial flows have been related many times to terrorist financing, and as such, they represent a big threat to state security. UNODC and UNCTAD have been working within the framework of the 2030 Agenda for Sustainable Developments, which have identified within Goal 16 on peace, justice, and strong institution, target 16.4. By 2030, significantly reduce illicit financial and arms flows, strengthen the recovery and the return of stolen assets, and combat all forms of organized crime. One of the two indicators that measure progress toward these targets is indicator 16.4.1 that measures the total value of inward and outward illicit financial flows in current United States dollar. UNODC and UNCTAD are co-custodian of such indicator and are mandated to develop a statistical methodology as well as give input on statistical methodology to measure such indicator, which so far was an indicator classified as tier 3, meaning that there is no methodology, internationally agreed methodology to measure such flow. So with this work, UNODC and UNCTAD has been proposed a methodology and a framework to measure such flows, bringing such indicator from tier 3 to tier 2, meaning that a methodology exists, but data needs to be collected to be able to produce estimates on such indicator. The two agencies started from identifying what illicit financial flows are and identifying what can be bring into this definition for statistical purposes. Illicit financial flows have been identified as a monetary measure of international transfers of illicitly earned capital, as well as include originally legal capital transferred internationally for illicit purposes, and include as well legal capital that has been transferred illicitly abroad or used for illicit purposes. All these three types have a common element. All these three are illicit, which includes also illegal, but definition of illicit illegal will be provided, or probably has been already provided by Steve McFeely of UNCTAD on their side of the presentation. They are cross-border flows, and their flows, we're talking about flows and not stocks. So we are talking about a measure of flow and not a stock measure, and we are talking about not net flows, but inward and outward illicit financial flows. Just to say that this presentation focuses only on illicit financial flows from criminal and other illegal market activities, where UNCTAD provided or is providing another presentation for tax-related and commercial practices illicit financial flows. This work and this distinction of the two works, the two line of works, is relevant because the approach proposed by the two agencies, it's an approach that is disaggregated approach and a bottom-up approach. Why this is in the contrast of the approach that some literature focus so far on top-down measures of illicit financial flows, using several strategies, but not distinguishes what are the sources of illicit financial flows. A granular approach has been selected as the most clear and the most suitable approach that allows policymakers to be able to identify and target the specific sources of such funds. And this is really important, and this allows to keep more clear the policy agenda perspective that has focus on all the type of illicit financial flows that are illustrated before. These the two agencies have identified 4 types of illicit financial flows that are illustrated here. From illicit tax and commercial practices, there is a huge range, wide range of illicit activities, not only illegal, but some of them are legal formally, but they're illicit, from such as aggressive tax avoidance to tax evasion, which is an illegal activity, and other type of illegal activities such as illegal market activities, corruption and exploitation type, and terrorist financing. Going more into detail of what are activities related to illegal market and criminal activities, we identified under illegal markets, including illegal markets activities such as drug trafficking, firearm trafficking, trafficking in protected wildlife species, and under exploitation type and terrorist financing activities, kidnapping, slavery and exploitation, sexual exploitation, extortion, and so on, which are separated because they have a different impact and a different type of, let's say, approach to national accountants, because some of illegal market activities are productive activities where the actors of the transaction have a consensus in the transaction, whereas exploitation type are kind of a theft activity, and one of the two parts of the transaction generating illicit financial flows has no consensus. That's the reason why we distinguish between the two of them. Just to give more an understanding of what is the approach can be seen from a country perspective. Illicit financial flows emerging from drug trafficking, seen from a perspective of a country importing and consuming drugs. A country importing drugs is facing a transaction of imports that correspond to a transaction of resources that go from the country abroad for such a purchase. And this is an outward illicit financial flows that is generated during the productive process. In the same time, in the country, other value is generated while processing and selling drugs at the wholesale and retail markets. And this value that is generated can be either consumed or invested in the country or abroad. And this investment or consumption abroad generates other type of illicit financial flows that do not belong anymore to the productive process, but belong to another type of also choices, type of investment or consumption choices by the criminal actors. This is why we distinguish between the left-hand side of the slide and right-hand side of this part. This slide between income management and income generation illicit financial flows. Income generation illicit financial flows are connected to illegal markets and their functioning, and they're linked to transnational supply and demands of illicit goods and services. Whereas income management illicit financial flows are flows that manage, they're related to the management of income generated from illicit activities, and they are linked to the consumption and investment patterns of illicit actors, as I said. These how we implemented practically these models. In the recent past, UNODC has tried to measure illicit financial flows, for example, from drug trafficking activities, and especially in relation to income generation type of flows. And the results that we want to give today are just to give you an example on how much this flow generates every year in the country. Specifically, this case is related to opiates trafficking in Afghanistan, and we estimated that the amount of illicit financial flows related to export of opiates from Afghanistan abroad generates a value that is more than double than with respect to the agricultural products exported by the same country in 2018. Another example on Mexico is from a recent pilot activities we conducted between 2018 and 2020, is that illicit drugs generate exports that correspond to an inward illicit financial flows estimated at around between 8 and 17 billion US dollars, which more or less equals the value of agricultural products export between 2015 and 2018. And on smuggling of migrants, we estimated the value of smuggling of migrant services exported by provided by local migrant smuggler to migrants that were trying to cross, and they crossed the country, Mexico, and go to the US, equaled more or less the value of the air passenger transportation services exported by the country. This is to conclude why it is an advantage to, and what are the advantages of such framework, and what are the what these frameworks allow to measure is that the key feature of such framework is a country level approach that allows to measure IFF at the country level, at the national level, in line with SDG indicator framework. And the framework is compatible with the system of national accounts and balance of payment framework, so adopts the same terminology of national accountants. At the same time, it's a comprehensive approach, so includes all type of IFFs and allows to target specifically the origin of such flows and the type of activities behind the generation of such flows. And this disaggregated approach allows a more granular understanding of what are the sources of illicit financial flows for each country. Then I would like to come to a conclusion and to thank you all for attending this presentation and for following us. For any information, additional information, I would like to invite you to consult our webpage where the statistical framework is presented, or to read our papers. Thank you. Thanks for everyone.
Hello, good afternoon, everyone. So my name is Bojan Astau, and today we will look at the tax and commercial illicit financial flows, or IFFs, and the methods for their measurement. There are a few things we can say about the IFFs, obviously. Let me just get the screen moving. Yes, okay. So first of all, the IFFs are important within the 2030 development agenda. Specifically, we have the indicator 1641, so total value of inward and outward illicit financial flows is set to measure these flows and inform policymakers how related target 16.4 is achieved. Second, two agencies, namely UNCTAD and UNODC, have been assigned as custodians of this indicator, which means that they were tasked with the answering of the two questions. So what are IFFs, number one, and number two, how to measure them? To that end, custodians have set up the statistical task force composed of various international agencies and national institutions, such as the national statistical offices or the tax or custom authorities. Now, based on the common work, UNCTAD and UNODC published in 2020 the conceptual framework for the statistical measurement of illicit financial flows. reflecting concepts and standards that have been approved by the Interagency and Expert Group on the SDGs and the United Nations Statistical Commission. In 2021, the custodian agencies finalized methodological guidelines for the measurement of the IFFs in country pilots. Now, the conceptual framework defines IFFs as financial flows that are illicit in either origin, transfer, or use, that reflect an exchange of value and that cross country borders. This specifically is important for the measurement part. Now, 4 categories of IFFs are identified, namely, as we can see, so we have the illicit tax and commercial practices, we have illegal markets, corruption, and exploitation type and terrorism financing. Whereas with the last 3, the question of illegality is clear. So all these are illegal activities. With illicit tax and commercial IFFs, the situation is rather more complicated. As we can see, illicit tax and commercial IFFs are essentially broken down into 2. 1, illegal tax and commercial practices. Examples here are like tariff, duty, or revenue offenses, tax evasion, and so on. Often these are the part of the non-observed or the hidden or even the shadow economy. Now, the second part of the illicit tax and commercial IFFs is so-called aggressive tax avoidance. Hiding or shifting profits, like through manipulation of transfer pricing, strategic location of debt or assets or intellectual property, tax treaty shopping. So these are all examples of aggressive tax avoidance. What is important here is that these can be part of legal business transactions. Now, while tax avoidance is legal, aggressive tax avoidance can be detrimental to sustainable development and is therefore included in the SDG indicator as an IFF. Now, statistics, official statistics, cannot be based on legality, as national tax laws differ and also change, and therefore the indicator is based on the activities that may generate illicit financial flows. The boundary between legal, illegal, and illicit tax practices is somewhat unclear, and therefore a continuum of activities between legal tax planning or tax avoidance all the way to illegal tax evasion. So this continuum is called the aggressive tax avoidance or the aggressive tax planning. All of this can be used for the measurement of the IFFs. Various methods to measure the IFFs have been proposed and applied in research. Now, even though these methods all strive to estimate the size of the IFFs, research or econometric approach and statistical approaches are markedly different. Now, statistical approaches tend to rely more on the so-called bottom-up or direct measurement of IFFs, which may be important for reliability or political buy-in in our case. Typically, also, statistical authorities have access to more detailed data for the analysis than the researchers. It is also important that there are the IFF methodologies that can be integrated with existing statistical frameworks, such as the system of national accounts or the balance of payments. Now, although various systems in the countries will differ, like the statistical system or administrative or even taxation system, it is important that as much as possible, countries can apply comparable methodologies that are comprehensive and fully consistent with the conceptual frameworks. In the guidelines for the measurement of IFFs, selection of suggested methods is based on an assessment of these methodologies with respect to 3 groups of criteria. So the first one is the soundness of methodology. Here we have criteria like clarity of concept or transferability or capacity requirements. Then we have the source data, so criteria looking into the availability or coverage or even granularity. And last, but definitely not least, is the quality of results, which refers to the relevance for use or the clarity or coherence, to list just a few of the criteria. The guidelines link activities that generate tax and commercial IFFs to measurement methodologies. Now, in the conceptual part, activities are discussed in more details. Here we depict only the three main groups or the three main types of the tax and commercial IFFs. So we have the trade misinvoicing, we have profit shifting, and then we also have the flows of undeclared offshore wealth and related tax evasion by individuals. As you can see, we have identified two alternative methods for each of those types of the tax and commercial IFFs. Specifically, we propose to have a pair of methods for each of the type. So two different methods with respect to the data requirements or the statistical capacity requirements to account for varying national circumstances and statistical capacities. So for the trade misinvoicing, we have the partner country method, which reviews bilateral discrepancies in reported trade flows. We have the price filter method that builds on identifying abnormally priced transactions to identifying the signs of the IFFs. For the profit shifting, we have method number 3 that looks at the distribution of profits among the M&E group, so within its units, relating it to the corporate effective tax rates and underlying economic activity of a particular unit. Method number 4 compares units that belong to an M&E to a comparable non-M&E or a domestic unit to identify potentially tax avoiding behaviors. For the flows of the offshore wealth, method number 5 looks at the undeclared offshore assets, compares what has been declared by citizens of country A and what international reported data say about the assets held abroad by citizens of country A. Method number 6 starts from a global level imbalance between international portfolio liabilities and assets, and then breaks this down to a country of ownership and using various assumptions to finally arrive at the flows of the IFFs. Now, UNCTAD guidelines provide a suite of methods for pilot testing to allow national statistical authorities to select and adapt methodologies to their national circumstances with respect to nationally relevant types of the IFFs, data availability, and statistical capacity. Moreover, guidelines provide additional tools and resources for national authorities to undertake national statistical measurement of tax and commercial IFFs. It will be useful to have many countries test the measurement of IFFs that affect their economies. Estimating IFFs will not only provide clarity on the scope of the IFFs, but also help improve the quality of key macroeconomic statistics, such as the GDP. Now, UNCTAD and UNODC, jointly with the regional commissions, are supporting countries in the pilot testing. With this, thank you very much and have a wonderful day.
This is Salome Flores. I am the coordinator of the INEGI UNODC Center of Excellence for Statistics on Governance, Crime, Victimization, and Justice based in Mexico City. And I'm happy to participate in this World Statistics Congress 2021, presenting the results of the pilot to measure illicit financial flows in Latin America. The objective of this pilot was to apply the conceptual framework developed together by UNODC and UNCTAD, and to test the methodology included in this framework to measure IFFs. The time frame in which we applied this pilot was between 2018 and 2020, and we selected 4 countries that agreed in participating in this pilot. The countries were Colombia, Ecuador, Mexico, and Peru. And with different participants representing different institutions in these 4 countries, we discussed and agreed which markets would be included in these measurements. The agreement was to include or attempt to measure the illicit markets of drug trafficking, smuggling of migrants, illegal mining, and trafficking in persons. As you can imagine, finding the data for measuring these illicit financial flows associated to illicit markets was not easy to find. We really tried to be creative in order to identify possible data sources that would allow us to produce these measurements and that have never been used for this purpose before. The first step was to, through the measurement of the illicit financial flows, try to understand the size of the market and mainly take a look at the size of the market from the income perspective. The second step was to understand which were the intermediate costs associated with this market. And then finally, having understand the size of the market and the net incomes associated to each one of the markets, we were able to produce measurements on inward and outward illicit financial flows, mainly related to the activities about income generation. So in this presentation, I'm briefly sharing with you the results of the measurements for drug trafficking and for smuggling of migrants in Mexico. So the drug trafficking in Mexico, the way we went about it was to identify the different variables regarding to domestic production, domestic consumption, the destination countries and the consumption, the national seizures, the destination countries and the seizures that they have, the prices and the purity of different substances. It is very important to understand again, how the market works. In this case, Mexico plays different roles in this market. So the first step was to really understand the role of the country, the substances that are part of this market of drug trafficking, and also understand the flows. If if the flow is an inward illicit financial flow, then it should be a flow issued by a non-resident and transferred and received by a resident in this country in which we are producing the estimates to. So this was the first precondition to understand the market and to be able to estimate the illicit financial flows. Now, the data sources that we use, as you can see in the screen, are different ones, but mainly we use reports from the national government to UNODC, and also data from the General Attorney Office in Mexico for each one of the variables. Now, the formulas that we use for estimating the inward illicit financial flows were combining two models. First of all, regarding heroin, we use the supplies-based model because Mexico is an exporter of this substance to other countries. Understanding that exports were multiplied for the export prices, where export equals production minus seizures minus consumption. And then on top of that, we added a demand-based model for cocaine because Mexico imports cocaine from other countries. And the formula is destination countries consumption plus destination countries seizures multiplied by the producing countries market share multiplied for the prices. And the results were as follows, as you can see in the slide. The ranges of the inward illicit financial flows associated to drug trafficking in Mexico expressed in billion US dollars have an average of 8.49 billion US dollars. We produced the estimates for 4 years, and you can see the breakdown there per year and per substance. And this is part of the results. The report also contains the results for drug trafficking in other countries such as Peru and Colombia and Ecuador as well. Regarding the other market that we were able to measure in Mexico, the smuggling of migrants, Because of the particularities of the market, we had to identify variables associated to this flow. In particular, the number of irregular migrants that were apprehended in Mexico by nationality, the number of irregular migrants that were apprehended by the US Border Patrol, again, by nationality. The data sources were the Ministry of the Interior of Mexico and the US Department of Homeland Security. We also identify the approximate percentage of irregular migrants who pay to cross Mexico and the same percentage of those migrants who pay to enter the US irregularly. And finally, the other variables that were part of this model were the prices paid by both irregular migrants, either crossing to Mexico or crossing the border to the US. The formulas that we use to estimate the inward illicit financial flows associated to illicit to smuggling of migrants were the number of foreign irregular migrants multiplied by the percentage of those who hired a smuggler, by the percentage of the fee that they pay, by multiply for the percentage by the percentage of the earned by the resident smugglers. And again, we have this element of understanding the inward illicit financial flows as the flows that are issued by a non-resident and received by a resident. The results were are shown in this slide. We have an estimated range of 1.12 billion US dollars. And we produced this estimate using data for 2016, 2017, and 2018. And well, these are basically the results of this market. We also have the same estimations for outward illicit financial flows, and the variables are very similar. And the results are a bit different in this regard. The outward illicit financial flows have an average of 10.86 million US dollars. And well, you can see the full results. Now, just to sum up very briefly, some of the challenges that we faced in this pilot are regarding the methodologies. We have to adapt the framework to the regional, and then to the national context, but also to each one of the specific markets. It was also a challenge to convey the message to all the relevant institutions about the importance of the indicator 16.4.1. We also face a huge challenge in identifying all the relevant institutions that potentially collect data regarding illicit financial flows. Also, it was challenging to have the institutional engagement throughout the whole project. And finally, an element of data collection, because data, as I already mentioned, is scarce. And there are also issues regarding the confidentiality of the information in some institutions. At the end of the day, the benefit was that we were able to identify data gaps. We were able to use data in a creative way, having institutions to think about the data that they collect and own from a different angle. After the pilot, some of the institutions conducted their own analytical exercises, and we are happy to say that some of them are even conducting additional analysis regarding the illicit financial flows and the different markets. It was also very interesting to see a partnership developing between not only national institutions, but also between the different countries. And we could also see that the relevant institutions have started dialogues regarding how to strengthen the data collection systems and how to exchange relevant information to conduct most robust analysis. So this is my presentation, and just finally share with you that the results of this pilot are available in this website. If you scan the QR code, you can find them. And it was great to have this opportunity to share these results with you. Thank you very much.
Statistics in the field of illicit financial flows. Measuring or quantify illicit financial flows is challenging, given that it is a hidden activity and and information needed to measure it cannot be captured by a single data source because these are scattered in different organizations of the country. Measuring IFFs then relies on the use of indirect or proxy measures rather than direct observation. That's the importance of data and statistics. Ghana suffers high levels of illicit financial flows, mispricing in trade, import and export, high exposure and vulnerability to IFFs in trade, foreign direct investment, double taxation treaties, financial security, and corporate tax having activities of partners. These have adverse implications for inward, outward direct investment, import-export trade, withholding tax yields for interest payments, royalties, banking claims, and dividend payments. There is a lack of a uniform framework for conceptualizing and measuring IFFs until recently when UNCTAD and UNDOC established an international task force in 2019 to develop comprehensive methodologies to measure the indicator 16.4.1. Ghana has been researching illicit financial flows using the price filter methodology since 2014 based on both macro and micro data. Price filter analysis was used to study and evaluate each import and export record against an arm's length price range in our trade with the European Union and the US for the period 2000 to 2012. The upper quintile price and the lower quintile prices are estimated for each commodity category for the EU World, US World, the EU Ghana, and the US Ghana pairs. The price range between the upper quintile price and the lower quintile price is assumed to be the arm's length price range. If the declared price is a particular transaction falls within the interquintile price range, it's assumed to be within the arm's length transaction. So therefore, there's no problem. Otherwise, if it's outside it, it is flagged as a suspicious transaction, requiring further investigation by the customs. Initial results from our analysis show that trade misinvoicing is real in Ghana, especially in our trade with the US and the European Union for the period 2000 to 2017. In the case of an evaluation of imports for the 13-year period, the invoice amount was 2.7 billion for the EU and 630 billion for $0.63 billion dollars for the US. An evaluation of exports to Ghana for the 13-year period was 2.8 billion for the EU and for the EU, annual trade mispricing is between 100 million euros to 300 million euros, while that of the US is $328 million. Spain is the largest underpricing partner for the 30-year period, with the Netherlands, UK, Belgium, Greece, each at 100 million for the 30-year period. Identifies export sectors, commodities with significant underpricing include wood products, ore, cocoa, and gold. Therefore, within the 13-year period, EU imports was about 14% undervalued, while US imports was about 21% undervalued. In the case of exports to Ghana, EU exports was 40% undervalued, the US exports was 8% undervalued. Thank you very much.
So far, we've listened to 4 presentations on measuring illicit financial flows in the official statistics. I'm going to highlight some of the key takeaways and also where UNESCO, UNCTAD, and the UNODC are in terms of the process on measuring. So the first big takeaway really is that we finally have a formal definition of illicit financial flows. This has been a huge area of contestation for nearly a decade. Without a proper definition, it's not clear what is in and what is out from a measurement perspective. If we look at illicit financial flows, they need to be illicit in origin, transfer, or use. More importantly, they refer to an exchange of value rather than just money or pure financial transfer, so hawala transactions can be included. More importantly, they're a flow and not a stock. And finally, they must cross a border. So indicator 16.4.1 basically measures the total value of inward and outward illicit financial flows in current US dollars. As a result of the very rigorous work that has been done by the International Statistical Task Force on Illicit Financial Flows, this indicator has been reclassified from a tier 3 to a tier 2 type indicator, meaning that the indicator is conceptually clear and based on internationally established standards, while the data is not yet available from the various countries. The next phase of the work currently being undertaken by UNCTAD, UNODC, and UNESCO is really in the pilot phase. UNODC is further ahead on this process or on this journey. They've been working in Latin America and are now expanding into Asia, focusing specifically on crime-related illicit financial flows. UNCTAD and UNESCO are focusing on tax and commercial-related IFFs on the African continent. It doesn't mean that they cannot look at the other buckets of illicit financial flows, but essentially the pilot studies try and build capacities and make sure that countries are actually able to measure illicit financial flows, and in the process actually learn from the methodologies that have been used, test their rigor, consistency, accuracy, etc., and see how effective they are from a measurement perspective. What's very important here to note is that the current definition does not include IFFs in the domestic economy. So if there's corruption or state capture and that money remains at home and doesn't cross the border, then those particular illicit financial flows would not be included. This is problematic if you're trying to curb illicit financial flows and corruption in the domestic economy, but it doesn't stop a country from still working on that. It's just not relevant from a measurement perspective for SDG indicator 16.4.1. The second important point to note is that while these methodologies are in the process of being tested, we haven't measured them in a way to see where there are overlaps and double counting. We saw in Boyan's presentation actually that there are overlaps between the certain methodologies. However, that will be a challenge in future as the indicator needs to be added to get to one cumulative number. That's a problem for the future. What's been very nice about the definition is it has bucketed illicit financial flows into these 4 categories. The challenge with this is that although they are relatively discrete, from a measurement perspective, there do seem to be some overlaps, and obviously that will be part of the exercise of trying to eliminate all the double counting issues. So enter into the data availability and the capacity problem. So essentially there's quite a bit of data and it's all over the show. And essentially what you're wanting to do is try and get the statistical authorities to try and get all the data into one particular place so that they can at least measure it. The important thing to note is, as Boyan had highlighted, that there are a lot of national accounts type data, and those methodologies relate to estimation or econometric type macro top-down methodologies. However, for statistical measurement purposes, we are far more interested in granular bottom-up type methodologies that use transactions level data or administrative data. While there is a lot of quantitative data out there, we are measuring something that is hidden, so you still have to use methodologies with strong proxies and assumptions in them. And at the same time, there are a lot of qualitative tools that are available, which are quite useful from a curbing illicit flows perspective because they highlight the various threats and risks. What's challenging in the space of IFFs is really that data is housed in multiplicity of institutions, which makes it very complex. There are personal protection of data information issues, as well as confidentiality issues that need to be addressed while working in this space. The most important thing is where there is granular data, although the methodologies don't focus specifically on using artificial intelligence and machine learning, countries are not precluded from trying to use those techniques. They can leverage any technologies that use artificial intelligence and machine learning in order to detect, curb, and measure illicit financial flows. What makes the illicit financial flows space particularly complex from a measurement perspective and obviously a curbing perspective is that it has all these multiplicities. The important thing to remember is that you're working across multiple disciplines. You're working across tax, accounting, law enforcement, trade, financial services, statistics, economics, public finance, to mention just a few. You're also working across a multiplicity of departments within countries and across countries. So you're working with tax and customs, you're working with central banks, anti-corruption units, statistical offices, law enforcement authorities, ministries of finance, FIUs, supreme audit institutions, justice departments, prosecuting authorities, crime and financial intelligence units, the police, etc. So you've got a large number of institutions that are actually holding little pockets of data all over the show. To add to the complexity, because you're talking about inward and outward flows, you're also working across jurisdictions. So it's not just your own country, across the different spheres of government and across the multiplicity of institutions, but now you're working across borders, which adds to the layer of complexity. And then finally, you're working across different spheres with different multilateral institutions and organizations, across the different regions, countries. So we heard the challenges that were mentioned in some of the earlier presentations, where you are trying to take the methodologies down from a country level or from a regional level down to a country level, or from a country level up to a regional level, and then to obviously a global level. So this is what makes the problem rather complex, with little pockets of data all over the show and having to work with a huge number of institutions. Given that all these pilots are being run, what is important is that countries should commit to trying to measure illicit financial flows. Once they've committed to this process, the next step really is to try and pool their expertise across their various institutions, across the landscape, and then particularly identify who the official statisticians are that will be working on this particular measurement problem. The third step is then to actually assess the types of IFFs that are pervasive in that country, and in that instance identify which variables need to be, which variables are relevant and what data is required to actually measure those particular variables, and then finally assess if the data is in fact available. And then finally only embark on the measurement process, where you want to take an in-depth base year study of measuring illicit financial flows, testing the various appropriate methodologies. As Boyan had mentioned, it isn't the requirement to try and do as many methodologies as possible, but rather to try one or two that are most relevant. Then once you've tested and validated the data, it's important to actually publish the estimates. We're sure that in the first round of the pilots, a lot of this information will remain confidential, but available for learning purposes. And the final step is to really share and learn and improve on the methods that are available and build capacity, not within the pilot countries only, but within the broader global framework. If you'd like to see the other presentations, I've attached the links here for you, and thank you very much for listening. I hope you have enjoyed the session and learned from it.